Hey everybody, I just want to talk a little bit about the indicator disaster that creates winning traders about what 1 to 3% of the time, and then the other 99 to 97% of the time, everybody's in a big club of people who just donate their money to the rich and powerful. Okay, and we kind of wonder why. Well, let's look at this real quick. Okay, just taking some random popular indicators and I've put them on a chart, and we're going to go through them. Okay, so let's look at this MACD. Okay, so the MACD has some lines that cross over, moving averages. One of them is the signal line, the other one's not the signal line. Then you've got a histogram, and the histogram has some apparently stronger and weaker, and then movements to the downside. And I'm looking up here. Okay, so listen, that's some candles up here. So I could say that potentially, there's potentially some health there, but we also need confluence, right? We need confluence. So what are we confluencing with? Because like let's say we just took this CCI. Okay, so this CCI is it giving us a signal to create, we should enter here? Well, the balance of power is telling me that that's not the right thing to do. And accumulation distribution, who knows what that thing's doing? And there's been no change in the 24-hour volume. That's almost irrelevant. So that confluence on the MACD is, and also listen, if I'm only looking at a MACD crossover strategy, which we all know that's not efficient, and that's the crazy thing too, is these crosses, these lines form after the candle. Okay, I didn't change any of the settings, but and I know, or you should know, that these crossovers occur late, so the price has already moved past that at that point. This is this is after the fact. So the MACD, probably not going to go there. And this the Dow chain type deal here. Again, what is it doing? You know what? Isn't it confluence? Am I in confluence? Well, these two right here, the CCI and the choppiness index, are both in opposition to each other, and one of them is in opposition to the balance of power. So is that more right or is that more wrong? Well, the balance of power is down and the ADX is down. The CCI is down, but the choppiness index is up, and this Dow chain is apparently up. So you know what? I don't know about confluences, and again, all of these are happening after the fact. So let's just get rid of those. Okay, let's just get rid of them all, because if you can spend a couple of years trying to figure out which one's right, which one's wrong, and more importantly, or not more importantly, equally as important is the amount of money that you'll have to spend trying to figure out a failing strategy. So we're reducing it. We're getting down here to where like maybe indicators and these little indicator panels. This thing's up and down, up and down, up and down. What the heck is happening? Here's a 1 minute chart. That's when the action happens on the 1 minute. A lot of people are like, well, you need to actually, what you need to do is you need to go over here to the 4 hour. Okay, so let's go to 60, 240, 4 hour. There we go. Okay, we'll go to the 4 hour chart. Okay, so now I'm waiting a long time for this to happen and this to develop, and I still have to be able to ride out all these big moves. So apparently that's not really the answer. So let's get rid of the balance of power. Okay, this is the awesome oscillator, some sort of a you should only trade here, down. There's movement in here. Okay, let's look at this. No, it's not all right, John. Oh, look, that's green. So is it weakening? Is it going to go to the upside? I don't know. And you know what? If you were really truthful with yourself, you would say, yeah, you know what? I don't know either, and that's why I happen to be still here looking for. Because I'll tell you right now, I am not looking for another trading strategy. Nobody that is using my tool is looking for another trading strategy. The only reason I'm here on YouTube is to show you what I have. Period. There's no question about that. because I don't need any of this stuff. If you're here looking for stuff, that means that the thing that you're using hasn't done the trick, and you know it. You know it in your gut that it's not the one. And I'm going to tell you right now that our VMAX is the one. And if it's not the one, it's one of the ones. It's in the top 3 to top 5, period. And the only reason I'm saying that is to be accommodating, because I'm not using anything else. Okay, I'm introducing a fund, $376 million backed fund, mid 2024, and I plan to have my cherry-picked traders are the ones who I can tell statistically are using my tool. All right, so let's move on. We're going to get rid of this. Let's go down. Let's go down here. Well, let's do this. Let's go to something at least reasonable. Let's go to a 5 minute. I mean, surely we can get a little bit farther down in there, right? Okay. So yeah, what is this? I guess, do we have a downtrend? Was it a downtrend? There we go. There was a lot of movement up and down inside this downtrend. So there's no real way to measure this. So I'm just going to get rid of it. Okay. Accumulation and distribution really doesn't. It's a jaggedy line. Okay, maybe you can understand how to use that line, but what's the confluence that you're going to put with it, and is that confluence going to just get you into what do they call that? The analysis paralysis, where you're trying to figure out which one's doing what, and you can't tell. So you don't want to go there. All right. So let's get rid of that one. This obviously, you know how I feel about this silly thing. Okay. So now we're on the chart, right? Okay, we're on the chart. Let me move this up here and give you this space. Okay. So we got. I don't even know what that is, so I'm just going to remove it. Okay. I don't even know what that was. We got fibs, right? We got fibs. What level is it? Is it 618? Is the 1618? Is it the which level is it going to go to this time? And what if it fails? Okay, so if it fails, then most of your mentors and coaches that are like, I know there's one big company, they're down in Florida, and they're like, oh yeah, Fibonacci. But when it fails, it's because you missed something else. You should have seen something different, because Fibonacci is just a random thing. You know what I'm saying? I love the concept. When I first found Fibonacci, I was like, the magic number, or whatever they call that thing, the golden ratio. I was so excited about that. That and my son, I think he was like 15 at the time, and I was like, look at this is crazy. Michelangelo, look at the seashell, and look at the leaves. Fibonacci's are, if it is a nature-based thing, guess what? The market is not nature-based. It reacts on psychology, but it's a man-made thing. So how do you put them together? Okay, so I'm going to get rid of fibs. Okay, bam, I'm getting rid of fibs, extensions and retracements. Getting rid of Bollinger Bands. Okay, how about Bollinger Bands? What's that about? Okay, so apparently, if the candle gets up here, then I can sell off at the top of the Bollinger Band, right? Except for, what was this extension that came out here? So where's my stop? Did it stop me out? Did it not stop me out? I don't know. It doesn't seem like, it seems like multiple times just on this little chart I've been able to find points where it crossed out of the Fibonacci, or out of the Bollinger Band, and went to the other direction, and then it down here, then it bounced up, but it didn't reach all the way. So am I done? Am I not done? So now it comes back in here, and then it failed through here and just played in the middle until it went to here. What is that? Why would anyone teach you this? Okay, listen. Obviously, people have their reasons, they have their strategies. Well, a big reason is that most mentors actually are what they call introducing brokers, and they're going to introduce you to a broker house, okay? And they're going to make a commission every single time you press the button. Every time you enter a trade and every time you exit a trade, they're going to get a little piece of the action. And so their thing is to convince you that you know what you're doing, get you to push the button as many times as possible. The broker, on the other hand, most brokers are B-booking. What B-booking means is it's a real it's the live market, but it's not attached to any liquidity or money on the backside. That's the difference between A book and B book. So most brokers, or many brokers, are B booking you. A lot of prop funds, the prop fund measurement runs on a B book. If you come into my prop fund, initially you're going to be B booked, because I'm not going to put real money out until I know what you're doing. But as soon as you show me what you can do, we're going to A book you, okay? Because now we got you in the liquid market. You're a real trader, and I can copy a real trader into mine. I can fund my 501c3 Praetorian Fund, which is a whole charitable organization. Is the reason why I'm doing this, but because I'm going to A-book you. So the reason that you get taught these failing strategies is so that everyone between you and your wallet can get paid. And you're sitting there just chasing the dream. You're working hard every day. You're frustrated. You're not getting paid enough. Your wages are stagnant or going down, or your job is being shipped overseas, and your landlord or your mortgage holder or whoever it is, your credit card company, the gas station, everyone else, all the big money is raising the prices. Everyone's getting squeezed. If you don't believe me, check and see why over 3,000 major retailers closed multiple locations in 2023 because of theft. Why were people stealing? Because they couldn't afford it. If you don't have what you need, you're going to steal bread. It's in the Bible, okay? And you don't have to believe the Bible, but you can recognize at least that as a popular book, all right? It's there. If you don't feed a man, he will steal bread. This is where we're going. This is why this is happening. This is why you've been taught this nonsense. So let's get rid of Bollinger Bands. I don't know what this DC thing is, so let's get rid of it. Fractals. These puppies right here, they're always late. Okay? And then you got to count bars behind them, and then you got to worry about, and then we got an engulfing bear. So we're fractals are done. We're not doing fractals. Then we have a engulfing bear and a I don't know what that is. Let's not even talk about patterns. Okay, let's not even talk about patterns. This one here engulfed that one. Okay, great. That one did that. This one engulfed with lots of real estate to the left, so there's nothing over there. So that gave us a little bit of bump. Okay, if you can keep track of all this. The only one thing I have to do is my indicator is painting these bars different colors, just so you know that that's not normally how they would look, because I don't use those bars. In fact, let's do this real fast. I'm going to pause this so I can see my indicator. Hang on one second. We actually changed this to a Heikin-Ashi. Okay, so what do you know about Heikin-Ashi? They don't have told you about Heikin-Ashi. Even with the color coding that my indicator has overridden, this is an easier chart to learn, but that's not what you get taught first, okay? So let's get rid of Engulfing Bear. This MACD stochastic strategy, I guess we're getting rid of that because it didn't paint. And then we're going to go and we're going to get rid of whatever that is. I don't even know, okay? We're going to get rid of all that. And we're going to turn on two things. We're going to turn on a VWAP, and we're going to turn on the VMAX. And we're going to give this some room in the top so you can see how it works. And then boom, okay? Listen. That's it. That's all there is. These two lines, when you see an orange column or a blue column or an orange column or a blue column, these two indicate this is a sentiment oscillator and this is a strength meter, okay? When you see those particular lines, those happen to be in confluence with each other. You don't have to know or check and see if they're in confluence because we painted a confluence. Okay, what else did we do? Well, we also made it so that your candles, when you have a lack of volume, even if you have strength in a move, there's no volume in it. The candle is empty. Excuse me, just one moment. We've got multiple signals that give you alerts that let you know, hey, think about making a move to the upside. The very next candle, move to the upside. Oh, look, this one here, think about moving to the downside. The next two candles downside, here's where the strength comes in, okay? The strength comes in when this line crosses down beneath this, into this zone. It's very simple. I have another video that you can look for that talks about the instructions how to use this video. are how to use this tool, and we're going to give you a 60-day free trial. We've gotten rid of the mess. Clear the mess. Use the best. Talk to you soon.